we are here for our 30th AMA at the TulipDAO. What's up, hybrid finance? It is a beautiful August 15th here at the TulipDAO. I am trading tulips, and we are excited to learn about this new DeFi project coming to the Avalanche blockchain. Boys,
Thank you for having us.
of course, McCory and Solo, if you could introduce yourselves, please go as far back as you can. I'm talking like if you're an entrepreneur, what did you do in like Web 2? What did you fail on? What did you learn from? Everything.
Oh, okay,
Fail
we're
on
going life
so
story
much.
time. So, yeah, I'm Xerox Solo. I run as CEO of Hybrid at the moment. Founded Hybrid with McElroy earlier this year. Background outside of Web3 is mostly in aviation. That's the closest to an applicable background that I have anyway. Web3 background is getting started in the general ops team of a few early stage startup protocols, some successful, some not. Moving more towards running the governance side of things through the DAO phases. So I used to build out a lot of those mechanisms, whether it's the actual voting mechanism itself, the consensus mechanism, or the discussion mechanism. I would have done all of that for a number of different protocols. Then moving to a sort of overall manager position in a protocol which ultimately failed miserably, which was Hera. Some people will know that, some people won't. But that was quite an interesting story, but a long one as well. And then eventually, just after that, that would have been when we would have started hybrid finance in kind of January time of this year.
No relation to Hera Finance on Metis, right?
No, that was planned for Binance, if I remember correctly.
Oh, so it never even launched.
Nope.
Trainwreck?
No,
You want to talk about it?
Oh, we can. Yeah, I'll give you the TLDR. So I found the channel through some dumb shill, hopped in, was chatting to the guy who was running it, and I came on board to build the governance. It was going to be a DAO, but it was going to be basically forking Titano. Right around when Titano's success had started. So started with, made up the governance systems for that and started to take on a little bit more work as well. Around about that point, this guy who'd been pretty inactive as the main founder just kind of vanished for probably about 3.5 weeks. And you guys know the pace that, DeFi moves at, plus particularly was moving at. That was like, we were still kind of at the top of the bull run with the downturn yet to come. So, people were getting bored and everything, and myself and the rest of the team there, we started to begin to just fill in the gaps and make decisions where needed to try and keep things progressing. He came back then for a couple of days, gave some input, went off, and eventually we continued just building out as much as we could with him gone then for another 4 weeks or so, till eventually just came back and removed the soul from the Discord. So if that constitutes a train wreck, I think
that's fine. Yeah, I've heard enough. But okay, so you gave me like some background, but I didn't really understand like how long you've been doing Solidity. What exactly do you do? What's your specialty?
My specialty is everything up to Solidity. So how everything works, except I don't code it. So I don't code Solidity myself.
You're designing the ecosystem then and doing product development.
Exactly, product development, and I'll also do a lot of the investments as well.
Treasury management. Okay, that's fine.
Correct.
And so you're a founder. You're a co-founder for Hybrid then.
Yes, sir. Yeah.
Okay. How many years in blockchain?
2 and a bit.
2 and some change.
About that. Yeah, not much more than 2.
Okay.
New, some would say. I'm sure.
Any business development experience or management experience outside of crypto before, like in aviation? I don't think I heard. I know you told me that you worked for a couple of different companies, but I didn't really understand like the size of your role.
Not particularly. No, I mean, like in aviation, there is management elements, but it wouldn't be considered like the management of a large scale team. But equally, um, in terms of
Project
working as
manager
part of a team, oh no, sir.
or starting your own company doing aviation stuff or anything, you know what I mean? Anything like that.
Not in that regard. So most of the closest thing I would have to relevant experience in that would be the experience I've gained through working as part of the bigger teams in Web3, protocols
Okay.
and projects. So yeah.
That's what I'm looking for, just to like see if you maybe opened a business, started a business, failed, were part of a management team, you know what I mean? Stuff like that.
Yeah, I
Okay, cool.
understand. I'll just one thing I'd add there is I mean I have a startup at the moment in the real world, but that's way too early stage really to even consider as much experience. But I'm more than happy to concede on experience that is I have the experience I have. Obviously, I can't change that. So you definitely, I'm sure that you're probably thinking, okay, this guy's a bit new, and that's completely fair. I'm happy to stand by that. But yeah, keep and then we can talk about what we've built, that sort of way.
Of course. And let me just be clear. I don't think any less of anybody because of their experience. I'm just trying to understand where you're at, and I take everybody as they are, and that's just a fact. If you do things well, you do things well. It doesn't matter.
Yeah, I
Obviously,
appreciate that.
you're an intelligent person. You're highly intelligent. Doing structural mechanic stuff for aviation companies is next level. Oh wait, no, sorry, that's what Milkman just said. But doing aviation work at all, period, for anybody. So
No, I appreciate
that's cool. That definitely gives you a different brain when you're coming to solve these problems, and you definitely understand logic systems, which is what's important. Um, Good stuff. Okay. Well, that's cool. I like to get a background because it does help to know if somebody has massive years of experience in business, or there's a fine line. You don't want too much fucking TradFi web 2. Like if somebody's got 20 years in TradFi and they come in here trying to do some crypto shit, 9 times out of 10 I just want to fucking shit on them. Like it's just like seriously, man, like it's a waste of everybody's time. They should not be wasting their time. They're gonna waste their Web 2 money. They should have kept it in Chase, like whatever. But the there's a balance. You need to have some understanding of the business world, and business development, and the way businesses are structured, organizationally and things like that, just to be able to succeed in scaling a project past a couple $1 million market cap. So that's just the realistic situation, and I like to try to get some clarity there. That's all. So yeah, we can move to McElroy if you could break down your bio for us, sir.
Yeah. I'm really new to crypto. I've been around. I started in crypto during the November last year, pretty much right at the height. I finally gave in, and a friend of mine got me into crypto, and I started investing. Um, Started with the blue chips, and then found DeFi. Found what was it? What is that? Man, I'm forgetting the word now. But Wonderland. Yeah. So put
Last year.
yeah, right at the height of right at the height. And
Mm.
put a bunch of money into that. Didn't realize what everything was. Lost a bunch, but learned a lot. So that was how I got started with crypto. And then just was trying to learn as much as possible, pretty much from November until I think around, was it like February or March? I found Hera, and I spoke to Solo about um, just trying to get started in crypto, just as a career. Um, I figured if I was going to invest in crypto, I might as well try to make some kind of income within crypto, right? So that it didn't siphon any more of my real world money. But in the real world, I started I was a stockbroker after university, so one of those TradFi guys. But did that for about a year and a half, almost 2 years, and decided to move to South Korea. Um, like most foreigners here in South Korea, I started teaching English. Just the easiest way to get a visa and to have an income. And you know, got married, and then just the 1 year that I thought I was going to stay here, ended up staying here the last 13 years. Now I run a small, like a home-based school. It's like an academy, um, teaching ESL to elementary school kids. And so that's kind of my experience. So I'm pretty new to everything. I pretty much came under solo and try to learn as much as possible. Now I help with project design, just designing uh, um, whatever I can, just helping with new ideas. And a lot of times now, like a lot of nowadays, do a lot of helping with the investment side with the treasury.
Got it. All right. Well, can you
Mhm.
what? So you're mainly just helping with community stuff and like team level decisions now.
Um, Not really community. It's more with the actual project. Just helping with tokenomics. Anything I can help with. Creating, uh, helping create like what our new token is now is something we both came up with, um, and even before that. But um, so yeah, a like not really project management, but designing and treasury investments and
Got it.
research, I guess.
Got it. Okay. Well, that's scary. I'll tell you what. I'm 10 years into crypto, more into market analysis and economics, and I still have moments where I doubt myself and I'm terrified and I don't think that I'm built for this shit sometimes. I know deep down that I am, but I'm just saying, if you guys get to be managing a decent amount of money, it's gonna be terrifying
Oh yeah.
for somebody like me to be investing in that. Just at a glance. Now, that's like a top level concern. But I do understand also that with proper strategy, it really doesn't matter. You guys could still be successful, right? With the right design and with the right planning. So we'll leave that at that. But now let's just get into like, if you could break down the project, hybrid finance. I know nothing about it. I did you guys a service by not reading or learning anything about this yet. I'm gonna pull up the docs right now and I'm gonna start glancing through things. But if you could, an overview of the product, how it's gonna work, and why I want to buy it. I'm not talking about some fucking random degen who will buy anything. I'm talking about me.
All right, sure. This is the sort of stuff that we're here for, right? So yeah, you got a good point there about you're saying, okay, you as an investor, and you've been here for so long, and you have so much experience in investing in DeFi and all of these sorts of things. And for you, there's still times where it's unnerving, and you maybe don't feel so sure. Why would you want to put your money with us when we've been here for so much less time, right? And that's such a good point, and there's nothing we can do about that. So, as in ourselves, we can't change that about our prior experience. But what we can do is we can build a project that's so solid that your worst case scenario, if we completely ruin everything, how exposed are you as an investor? And the answer to that is you're not exposed. and this is the beauty of what we've built, is hybrid finance is like an investment bank in DeFi, except it's better again. We allow users to deposit to us, pay an entry fee, and this is the only fee that you have in the protocol. So there's no exit fee then when you come to sell. We can get onto why that is later. But essentially, once that fee is taken out of the investment, what you invest is 100% never going to go anywhere. It is 100% liquid. You can withdraw it at any time, and sell pressure has no impact on the price that you will be able to sell at, and so your investment will never decrease regardless of sell pressure. And even if our treasury was to go to absolute zero, let's say we just fired
One
it
more
all
time.
into the void by accident,
I'm gonna
your
need you
token
to run.
value
I'm gonna need you
won't
to
go down.
run that back.
Okay. Yeah,
One
I
more
know it's a lot
time.
of like big promises, right? And you're like, there's no way. So the thing is, like, liquidity pool, great. They make DeFi very accessible, and without them, it would definitely not exist. But they're not suitable for many projects. Emissions tokens are often stupid. The idea that you're giving rewards in something that is um, traded in a liquidity pool means that rewards are what people want to sell. You want to get money, right, from a project. You don't want to get um, X token. You're going to have to sell it, and you have to sell it. The price is going to go down. So liquidity pools are not suitable for serious investments, and that's what we are. You're investing in us because you want to make more money. You don't want to, again, make X tokens. So we don't have a liquidity pool. You trade directly to and from us, and this allows there to be much more control over where the money goes and how that functions. You think of like a liquidity pool as like a big basin of water, and that's all of the money there in the pool, and you basically can withdraw from that. But if someone else comes in and withdraws first, they basically take something that could have been yours, or they take value from there, and so everyone else loses.
So what's
As
your
we use what
solution?
we call our solution is what we call an infinity pool. Okay, the name's not too relevant, infinity pool, but it's a playoff liquidity pool. And it's a contract that you interact with, and it's going to store 85% of your investment value. It's 85% because the entry fee is 15%, which is heavy, but we'll get onto why that is once we talk more about the infinity pool. And you can basically withdraw that money straight away, and well, let's actually, sorry, let me go back. So when you deposit, it will mint you the right amount of tokens dependent on the value that you deposit. So then you get those tokens. They're like a receipt of deposit. When you give those tokens back, you then remove your value. And when you give the tokens back, we burn them. And so they are out of the equation for price. And our price equation is very, very straightforward. It's the total value of all the assets in the infinity pool divided by the total number of tokens in circulation. So when you add value, the contract mints tokens. And when you remove value, the contract burns tokens. And so when you remove value and they're burned, it means that the ratio between value and tokens remains identical. The numbers have changed, but the ratio is identical, and therefore the
How do you
price
expect
is
this?
identical.
How do you expect this to be sustainable without new liquidity? It's just a Ponzi.
It's not at all a Ponzi because every single token that's minted is backed by actual money there, which the majority of the time is your money, right? All that this is not getting onto. We haven't even touched how we generate you money yet. This because these are two completely separate, basically risk separated entities.
You should
Our
really
infinity pool.
you should clarify how you're going to be producing um, 50,000% the USD value over a year.
You are looking at some misinformation there. That would be back our version 1 days of the rebasing token.
You should
We are
delete
not. I don't know where you're looking.
your Medium.
Oh, right. Okay. Old article. You're better to
You
look
should.
at our docs.
I thought that's what I was doing.
Let
Okay,
me grab you
found the
our
docs.
docs.
Found them.
Yeah. They should have that should be v2.hifi.net, highfinance.net. It should have a v2 in front. Otherwise, it's going to be v1. Let me DM them to you here just in case, just so we're looking at the same stuff. They're in your DMs there.
This is gonna be the hardest part of the whole AMA. This is a mountain. You should put those dots.
Yeah, so scrap 50,000% APY. That's out.
In the AMA chat.
Oh yeah, sure.
Same link for people. I am looking for an APY and I'm not seeing it. Is there no guaranteed APY anymore? Oh.
Nope, performance-based returns.
Oh. Well, okay, we can restart the conversation. So, that Medium article, you need to delete that shit, bro.
Yeah, I will. I'm gonna do it once we finish this call.
Oh shit. I was about to cook you, boy. All right. So you're going to be putting their liquidity to use in revenue generating strategies.
Yes and no. We don't directly invest the infinity pool value, because if we directly invested it, then you would be exposed to the risk attached with those investments. Instead, we have an entirely separate treasury, which does investments, and then revenue from those treasury investments is deposited into the infinity pool to boost the price.
Okay. So now you got another. Hang on, I'm going to be interjecting a lot here. Now you got another problem. So what's your initial raise going to be? What's your expected pre-sale? What's the distribution? I'm not seeing it.
Because we started, this is a migration or a change from our original. Let me go back a little bit. So version 1 was a rebase token back when rebase tokens were kind of popular. It didn't do very well because we caught the very tail end of rebase token season, so to speak. Equally, there were little errors that we made on our part as founders. There was things we learned from. I'm not going to point the finger and say it was all X, Y, and Z external factors. It was external factors coupled with definitely mistakes, as I'm sure every project has had. But that was a rebase token, and so we already have a treasury, we already have token holders, and we'll be migrating those token holders to version 2. So there's no raise, there's no pre-sale. We're just moving across, and then in the next few days, you're going to be able to buy the version 2 token. It'll be live, and version 2 will just get started, basically.
Okay, but in order to make these ideas make sense, you have to have some numbers here. You need to have, in order to execute these strategies that you're talking about and make the returns worthwhile, you will have to have a substantial treasury. I don't dislike the idea. I mean, we have a similar project on Metis Chain right now, but it's managed very differently, right? And there's a lot of other things that are incorporated with the ecosystem or going to be. My main concern is the ability to get your treasury to a large enough value compared to your market cap for you to provide revenue that is substantial for people. Otherwise, you're going to be lacking buy pressure, right? So, what do you think about that? And you I'd like to hear some numbers from you, because the fact that you have all these ideas, you haven't considered how much liquidity you're going to need and how much you're going to need for the treasury to make it work is a little concerning.
That's a good question, right? But to say that we have not considered it is incorrect. So we have basically the infinity pool value is going to be $100,000 to begin with. So you can think of that as our equivalent of liquidity, but really it functions very differently because we actually have, so to speak, infinite liquidity that everyone can sell at the same price and equally we can facilitate a buy of any value at all. Massive buy, tiny buy, that's fine, it doesn't matter. Treasury is 100,000, and treasury to be effective only has to stay within a capital efficient ratio to the infinity pool. Sure, if it lags behind, then we will be less capital efficient and it will be harder to generate big returns for people. Equally, then the other way around, if the treasury does really well, it grows massively and not many people buy in, well, then those few people that are in are going to be benefiting from a massive treasury working towards them. A lack of buy pressure is no harm at all, because we have our infinity pool allows every single person to sell at the same value. We don't need buy pressure. We don't need to panic about sell pressure. Selling does not harm the protocol in any way, shape, or form. So
users can only buy the token through your website.
Yep, direct with us.
I don't know how that's going to work for you. Just as like a product delivery aspect, it's very different than what most people are expecting.
It is, yep.
What's your target demographic?
We're looking for people who are looking to invest, not buy with the speculation that you can flog said asset to someone else at a higher value. We're looking for people who are in DeFi but maybe hold stocks as well, or who are looking for real yield and not looking for yield that is just dragged out of thin air by minting more tokens, or by minting more tokens but pretending it's through a node or it's through an NFT or something like that. Everything we do is based off the idea that if you make money, the project has made that money legitimately and transferred it to you. So that's what we're looking for.
I feel like it's just like a really, really convoluted way of doing the same shit that so many of the people are doing different ways. Like rev share, it's very common right now. The rev share from various things, whatever you're doing with the treasury or
Okay.
let's say royalties, right, or stuff like that, or services, revenue from services, things like that. Do you have something to say? Sorry.
No, like, are you familiar with how Wonderland works currently?
I am. Yes.
Yeah, roughly. So they have a revenue share system. So if I want to get revenue from Wonderland's treasury, I have to hold W memo, right? That's the only way to get exposure to the treasury. W memo is traded in an LP. W memo within recent-ish time spans has lost massive amounts of value. As with us, your initial is safe. Why would you want to go to a revenue sharing protocol with the idea of getting revenue from their treasury when your initial investment, not only may you not get great returns, but your initial investment could decrease in value? You could lose huge amounts of money when you could get revenue share from us, where you will never lose any of your money. In fact, your absolute worst case scenario is growth in and around, let's say, worst case scenarios, 5 to 7% annually, because we hold your deposited assets in USD Plus, which is a stable coin which pays out roughly that yield annually. So it's so much safer than going to a traditional revenue sharing protocol.
What type of strategies are you looking at for the treasury?
Currently fairly defensive. Whether or not we start to look at slightly, more blue chip or L1 exposure as we go. So, looking at potentially, we don't do it at the moment, but different AVE strategies. So looping with AVE is an option. We currently hold overnight ETS, which it uses Dystopia's WMATIC and USD Plus pool, and it hedges for the WMATIC autonomously. So it's basically like market neutral, but gets 60-70% annually or so. Basically, we would like to target maybe 60 to 70% annually for kind of farming strategies. For the current time being, we're also using trading bots, and we aim to be growing out our trading bot usage. Just to give you a little rough idea, we've basically started deploying last month. So through July, we started deploying our treasury ready for version 2 rollout. And within about 3 weeks or so, we netted 3.3% growth in the treasury for that time period. And we're relatively happy with that to begin with, and we'll aim to continue to grow that, but that's just where we're at right now.
How long did you say for 3%?
About 3 weeks.
All right. I mean, treasury management is tricky, but I would argue that in these markets, farming is not the strategy. That's a whole other conversation. We can get into that in a bit. And also people can make their own decisions whether they trust you with their money or not, right?
But I'll just interject there because you don't have to trust me with your money. I can't. It can't go down.
Their initial, but if they want money, they're trusting you to make money for them with that
Oh yeah,
capital
yeah.
of utilize it
Yeah.
themselves. Okay.
That's yeah. If you think you can do a better job, that's fair enough. But yeah, no, that's fair enough. And I also just want to rephrase actually something well, not rephrase, but just clarify on something really quick for people who are commenting saying, "Oh, there's no such thing as no risk." And actually, yeah, let me just be a little bit more specific with what we're saying about the risk. So the only way that you could lose your initial is if USDC, USDT, DAI were to lose their peg, or USD plus, but that's collateralized by those. So we would be talking about a huge
Or if your
stable
contract
coin,
gets exploited,
or
or
if our contract is exploited.
or if you have a rogue dev or somebody who snatches a private key, there are
Yeah, I
vulnerabilities.
mean,
People are putting trust in you, and you have literally no experience. And I hate to put it that way, but it's very, very blunt, And
it's
you're
also
asking
not
to trust you with a lot of money. So, like, who's your
true.
devs?
I'm sorry. May I
Well,
say
we're all
something really quick?
KYC'd here.
Because
Yeah, go on.
I'm sorry. From most of what I've seen in DeFi, I know you have maybe 10 years of experience, and that's what people say. We have to believe each other and trust each other in what we say about what we do. But from what I see, most of the projects in DeFi has very low experience compared to everything that you can see around the world, right? So
That's
just
why most
automatic
DeFi projects go to zero and die.
exactly. So, but you can't. You said before that you would not talk. Experience doesn't matter, but now every other thing you say is about experience. You know.
Well, because when
Um.
we're coming down to these things here in these discussions, ultimately it boils down to people trusting your experience. But what I'm
Exactly.
talking about specifically is security when it comes
Hmm.
to the contracts, your ability to maybe sniff out if there's an issue to just
True. True.
small things, okay? And it's
Okay.
stuff that we have to bring to the attention here because literally these people will buy your shit and invest in your shit if I'm bullish and if you sell this here. So
Yeah.
I apologize for me being blunt and stuff, but I'm trying to cut through the shit and just try to be very clear, and it just saves time. It saves time and it
Okay.
just helps. So
I'm okay. I mean, I'm okay with that. That's okay.
This is I watched your AMA with Omniverse, as you know. This is why we're right. Like, please, if you think I'm talking nonsense, tell me. But yeah, let's go through security. So yeah, we're audited with CoinScope. We've got a multi-sig, and we are all KYC'd, including our devs. So that's our commitment to security. Is it invulnerable? Of course, it's not invulnerable. But we're committed towards getting as close to invulnerable as possible. And if you think there's extra things we should be doing on top of those, then I would love to hear them.
no, that's good, and it's really good that, especially as such a new team, you are taking the necessary precautions with KYCs and getting audited pre-launch. It's very important. You still run the risk of like who's the dev. That's I'm not trying. I'm just playing devil's advocate because you have been so confident saying there's no risk, but inherently you're hiring some dev you don't know probably
He is
and
KYC'd though,
that we all
and
know how
we're
much that
audited.
fucking matters. KYCs are about as good as toilet paper these days, unless you get them here. and that's facts. And I apologize for throwing, for ruining your
I'm
KYC for
not
you.
I'm not gonna go there, but
I will.
that's a big
Everybody here in the
statement.
fucking chat knows it. There's a
That's a
reason
big
why we started. No, it is not a big statement. It's a fucking very true statement, and everybody in this chat knows it, that there is not very many trustworthy fucking KYCs. That's why we started doing them. I'm not trying to argue.
Are you doing AML checks?
We now have a process with Verif, yes, but we go beyond what other protocols do. It has nothing to do with the service you use. It has everything to do with who you're KYCing and making sure that you're KYCing the right people. Because 9 times out of 10, projects get rugged by people that aren't even KYC'd. They get just the founder KYC'd, and then the whole project is clear. That's the issue.
Okay, so let's say the fact that we're all KYC'd with Obsidian, I don't know whether you think they're crap as well. Let's say they're utterly useless. So we're all basically just not KYC'd. We're still audited as well. So is that worth it? Or is that did we just waste our money there as well?
You can do it. I'm only clarifying these things because you're like so confident in it, right? And I don't trust anybody's KYCs as far as I can fucking throw them. That's just the fact. Regardless, though, I do like Obsidian. I like that you guys are taking the steps necessary to build credibility. There's only so much you can do. I understand, and that's good. It's a positive. I just don't be over here claiming that there's no risk and that KYCs are bulletproof and all this stuff, because there's just it's not true. So let's definitely move past this. The big thing here that this protocol is going to come down to for you guys is management of the treasury. I can't even make a call because you won't share numbers. I need to know how large is the treasury. I need to know how large is the treasury going to be compared to the the balance held in the contract at launch. Like, what is going to be expected there?
Yeah, so it's 1-to-1 at launch. Ask me before you say I won't share. I'll tell you whatever you want to know numbers wise. Treasury's just
I asked before.
Okay. What numbers? What treasury value? Treasury value at the moment is 100,000. We don't have a raise.
You don't have any
We
target?
already have the money we need. We have the money we need. We're just migrating to version 2.
Okay, so how much money do you guys have?
We have $100,000 for our infinity pool, and we have just over $100,000 for our treasury. So starting at a 1-to-1 ratio.
Okay, so it should be healthy to start, and it's going to be. You guys are in position to succeed with NAV above market value.
So what we also do is we offer people to lock tokens, right? This is not mandatory, but I know people get touchy with locking because particularly with something that's traded over an LP, it adds risk. And let's say if we want to say that, there's risk with us as well, of course. So yes, it's upping your risk there. And it actually, the way that we do our locking, it's going to up your risk as well. But this is something you can do should you wish to, is you can lock, and then you lock your tokens for either 3, 6, or 12-month periods. What we do is we burn those tokens that you locked, and we move the value that was supporting those into the treasury, and we invest it directly. So now you gain more direct access to the treasury performance. As the treasury profits, not only does it distribute money into the infinity pool to increase people's value, it also mints fully backed tokens. So these are not inflationary because their value is added to the infinity pool, so they don't affect price. And we distribute these tokens to people who locked their tokens. And so at the end of their locking period, if the treasury has profited, they will have made more tokens than they locked, and they will get those tokens worth more money than they were at the time of locking. Equally, when you lock, you accept risk for those tokens. So should the treasury perform negatively through that period of time, you will lose the money that you locked. So if people don't want risk in that sense, if they don't want direct exposure to the treasury, be it up or down, there's that option. If you do want the opportunity to gain decent rewards, if you're looking at our treasury deployments and you think, yeah, they're going to do well, then you can go and lock. And what that does is adds more. It removes from the infinity pool and adds to the treasury, so it helps to keep us in that capital efficient ratio.
They're not locking your native token. You don't.
It is our native token. Yeah.
Okay, so they have to purchase the native token through the contract, thus
Yeah.
depositing liquidity into the contract, not the treasury.
No, so they'll deposit into the contract first, and then should they wish to lock after that, then their liquidity will be moved from the contract to the treasury in the return, basically, for those tokens being taken out of circulation.
Okay, so well, that's smart. I like that. So that's obviously variable depending on the treasury. And at the point where they sign that transaction, then their deposit is liable to, go up or down depending on what happens, right? So that
Yeah,
makes sense.
exactly.
That's sustainable. That is sustainable. I don't hate the model. What the biggest things you guys are going to run into is needing partnerships and knowing what to do next, because
Yeah.
that's the part that is going to be hard. And the other thing is marketing and getting people to use your shit, because coming to some project, it better look fucking sexy. I'm telling you, it better look good. It better feel safe. It better fucking, you know what I mean? It better be a great UI and UX to get people to use it. There's going to be some
Oh
serious
yeah.
issues with getting people to trust.
Yeah, that's a very good point about UI UX. So we the DApp that we have, which is coming out very soon, and that's basically what we're waiting for before we launch, is designed by a UI UX specialist, because I completely agree that's got to be smooth and slick to feel. Obviously there's other ways as well. Obviously we need to have those security measures in there, but equally just the feel people get off the DApp is gonna or do you feel like this is somewhere you do want to deposit your money? Because we're obviously so quick to trust LPs now because we know kind of how they work and everything, as this is something new and it's change, and that can be kind of scary, and rightly so. So yeah, this is I agree that this needs to be executed very smoothly.
Are you prepared to scale? Do you have there's some very important things. You may learn that you're not qualified to handle the treasury. You may learn that you want help with the treasury. You may get voted. The community may vote. Or is there any governance? I see governance in the docs. So
Yeah, so governance is limit though. So it's over certain investments made in the treasury, and it's the receipt that you get when you lock your tokens, which is basically a vote escrowed token.
yeah, okay.
That's what allows voting power, but it's over certain investments. So technically, they wouldn't be able to vote us out. I mean, this is something you take this at face value, right? Because this is just what I'm saying. I mean, you do that anyway, but I'm sure you'll probably criticize it, and that's fair enough. If we encounter any issues where we have grown and we are unable to manage the treasury effectively, or even as effectively as it could be, if we feel like it could be done better, then we won't hesitate at all to bring in and obviously conduct the relevant security measures that go along with that, but bring in, people with bigger experience, or people who run treasuries as a career, right? So there, it's not like, no, we're what
Specifically,
you're stuck with through thick or thin. That's not how it is.
specifically in DeFi is what I would be looking for, especially in the crypto markets. A focus there. What's important here, and what I'm looking for, and anybody who knows their shit will be looking for, is that you're going to understand when it's grown out of your control and when you need to bring in people that are more experienced than you. Um, Maintaining your founder roles, and bringing on somebody to help with biz dev, somebody to help with strategic partnerships, hiring an advisor, paying the right people for marketing, things like that. Because if you do break out, you get people past the trust thing, which you could do. This could really work. I'm being for real. I have to be critical though, because there's a lot of risk involved with you guys' potential treasury management. And that's my biggest concern. Trading bots are mediocre at best. 3% in the sideways market is rough. You know, over 3 weeks, you said that's pretty rough. You know, I would be aiming for 10% a day if I was doing active treasury management. And that's not from just yield farming. That's from, you know, swinging and doing things like that. That's fairly
10%
achievable.
daily.
Yeah, yeah. Maybe not the total entire balance, but on the trading balance.
Okay, I'll give you that on the trading balance.
Yeah.
I was not happy with that if you were gonna say on the entire balance, but
No, no.
okay.
Depending on the phase, right? I mean, we just proper treasury management is more timing your attack and knowing where to weight your bets. That's proper treasury management, as well as timing your entries into proper farms. So it's a combination of those. Like I'm not talking out of my ass here. We just turned our Metas project from like a 30-40K treasury to over 400K in the past 30 days or so. Had a crazy bull run
Right.
in a little micro ecosystem, and our big conviction play just paid out massively. And like, so sometimes it's not about consistency; it's about timing, you know. And that's one thing that's
Yeah,
very
yeah.
different in crypto as opposed to other strategies. But you know, so being dynamic, understanding, and learning, and all of those things are going to be part of the process. You're going to have to hire um, some more experienced people if this is going to scale. There's going to come a time, if this is successful, that you guys, you know, like I say, outgrows your ability. So you're going to need to do that. And as long as you're prepared and you're able to do that, then I think that you guys can succeed with this. But like I said, it's a big hump.
But
You
yeah.
got a big hill to climb.
Oh yeah. But the day that exceeds my ability or our ability to manage it, that's that's the day we're aiming for, right? You know, that's the goal of this thing is to, just to grow it and grow it as much as we can, and then if once we get to that point, the only amount that I trust ourselves to manage this is up until the point, I trust us to get it far enough that it can attract and fund the hiring of more experienced people. I'm very confident that we can get it to that scale. I'm not, promising you, oh yeah, if we got 500 million in assets under management, I'm not promising you, yeah, I'm gonna know exactly what to do. Maybe I will, maybe I won't. We'll see when we get there, and I'm sure you probably think I won't, and that's fair enough. We all have our opinions. But what I'm definitely confident of is we'll get it to the point where we can hire better people.
Real quick, I'm not here to discourage you. I'm not here to tear you down at all. I'm here to give your ass a hard time and make you prove your product. That's all.
Oh yeah,
Okay.
I just try
And
to criticize myself before you get to do it.
that's okay. Like, you don't need to, because honestly, I don't want to. I want to inspire you. I want to inspire, like, I want people to hear this and hear that you're like a young, intelligent fucking kid with a cool ass concept, dude. And I'm honestly impressed right now. You've built something that's fucking cool. I may not like the product delivery 100%, and I may not have full faith that you're able to take it all the way, but you have done something cool here. And with the amount of experience you have in the space and what you have developed as far as the logic here, it impresses me. So I'll say that, and I'll say that I will definitely be watching this. I'm probably not going to be putting a bunch of money into your guys' treasury to be managed, but I definitely am impressed by the concept, and I hope that you guys are successful. So
I appreciate that. And this is something as well we've spoken in other AMAs that we've done about is, see if people sometimes it's like painted like black and white in these things where it's like it feels like the AMA has to come to a conclusion of like should you invest or should you not invest? As it's like no, just let keep an eye on us, see how we do. like we our DApp is going to be built by Multifarm as well in the back end. So you'll be able to see a lot of, and it's all obviously you can see it on chain, but it's going to make it very easy to see where we're putting our money, how it's working out. Are we making a lot of money? Are we not doing so well? Keep an eye on it and then make your mind up. There's no panic. There's no pre-sale. It's going to sell out in 5 seconds. We're going to be around. We aim to be around for an incredibly long time. So just if you're not fully convinced, don't buy in straight away. Just people need to practice healthy investment practices, and so we want to encourage those as much as possible. I'm not here, like, I'm obviously here to tell you about it, and to you were asking at the start was why should you invest, and that's what we're here to talk about. But don't, we're not here to push you if you're not sure. We're just here to state facts and to try and defend our case as much as we can.
Come
But
on, you gotta
ultimately
sell it better
you want a
than
good
that.
choice.
You gotta sell it. No, you gotta. That's the one thing I will tell you is you need to be able to come into these conversations and say with confidence that you're going to be able to do, that you're going to be able to perform well with the treasury, make people be able to trust you, and that's going to be your biggest challenge moving forward, especially with people who are, more experienced in the space. Um,
Oh yeah.
I think once you guys get some projected APRs, you'll do much better in bull season. I'll say that. If you guys can survive through bear season, keep building and keep your community active, you might be onto something. But I have some concerns here from somebody in chat because we didn't really dig into V1. Obviously, you guys pulled the
Yep.
liquidity, right?
Yep, that was voted on by the community.
Okay. So
So
launch.
I can explain that a bit more if you want.
Okay, sure.
That was through the downturn. When like BTC and everything was tanking, and so the trading volume was so low, and a lot of people would have called the project just dead. Basically, engagement was low, and so we were just shedding money, through AVAX dropping in the LP. So it was either we moved to a stable LP with like a USDC or something, or we just pull it entirely. And since the volume was so low, we just had a vote over on our channel and said, "Look, what do you guys want to do? Because we're just shedding money here." And
So you
yeah,
pulled
it
them at
saved
the
us like
bottom?
$40,000. No, pulled it probably 3/4 of the way down, as in it had another 3/4 of the way to go, so a quarter of the way down.
Oh, okay. Okay.
We lost money in it, but equally we saved ourselves from much worse.
I suppose. We like I said went through something very similar, but um, that's okay. I mean, if community voted and you guys have moved the liquidity to V2, seems like everything is kosher there for me.
It's still the same vision and project and everything. It's just a different execution, and it's a much much better execution than V1. So we've had no one's like in our channel complaining about the LP being pulled. You can hop over and have a little look around. No one's worried about that. Obviously, people wish we could just magic them money back. There's always that a few people in each project that's like, why can't you just refund me my initial? And it's like that's unfortunately not how it works. But what we can do is we can keep building, and all of the money is still verifiably involved in the project. It's not gone into our pocket or anything through any of this stage. Um, and it is the same project. It's not, that you get those developers that they build one project, it fails, and then they're like, oh, we're just using this money to build this like completely unrelated thing that you don't want to be a part of, but you are a part of because it's the same money. This is the
Yeah, no,
same thing. It's never changed, never moved.
same idea, just different delivery, different. Yeah, I get it.
Exactly.
It's all good.
I saw some good questions way up here. Let me find
Yeah, I'm
them.
about to ask through, or actually, do I have any question askers on stage?
Yeah. So let's start with the Zoomer. He gave quite the list here, but right off the bat, your branding heavily relies on real estate imagery. Is that something related to the treasury reserves of USDC plus or USD plus, or purely artist influence on your UI?
It's just artist influence on our UI. We didn't want to go with images that were, so many crypto projects have really weird websites where they like pick a super weird theme and it's just shoved down your throat. So we just want some nice placeholder images while you look through the website and read about what we do, that sort of way.
And let's say to an investor that's a little bit not too familiar with the USD plus model, can you break down what that's backed by and how you anticipate it to hold order to back fully in your treasury?
Sure, yeah, it's a good point. So we initially thought we would hold everything in USDC, because it was just like that's the standard now. It's the best thing out there pretty much. USD Plus caught our eye because it's a stable coin that pays yield, right? Historically, it's like 8 to 12% annually, but it fluctuates just based off how much money they make. So USD Plus is fully collateralized by USDC, USDT, DAI, and I think it's NUSD, or I can't remember exactly. I think it is NUSD. And they just deploy it into really, really safe, again, safety is there's no such thing as no risk, but they deploy it into really trusted different liquid yield farming options. So it's still withdrawable, and you can always exchange USD Plus or USDC, and that's what its peg is to. It's not pegged to the US dollar, it's pegged to USDC. So for us, it fits within our risk tolerances as being incredibly safe, and we hold the infinity pool. 90% of that is USD Plus, and the remaining 10% then is USDC. So when you sell, you get USDC out. We don't force you to use USD Plus. You can deposit it, but you get USDC out, or you could deposit USDC. It's optional.
Perfect. And people investing into your protocol, is their return going to be given back in stables, or is it going to be through your native token in the infinity pool?
So it's through our native token, but in the sense that you don't get more of them, you just give them back to us at a higher price. And this higher price, so let's say our infinity pool starts at starting at $100,000. That's what it will start at. Let's say it goes up then to $200,000 solely from treasury profit. Then that's doubled the price, and it means that every single person can withdraw at that price. So every time the price fluctuates upwards, it will never decrease again, and so it literally never can go downwards at all, unless, again, sorry, USD Plus or USDC depeg. But other than that rare event where we would all kind of be doomed anyway, then yeah, so it's through greater value in your token holdings, in the sense you give them back to us and you get more money back. So the payout will be in USDC, but it's when you sell.
Perfect. And did you have any idea at this time? I know we lightly discussed, but if you were going to utilize another protocol's trading bot per se, if ones that have had like a stable backing and some reputation over time, do you have anything in mind at this point, or are you still kind of looking through more safe strategies in this moment, like you mentioned, the Aave looping?
We're using 2 trading bots at the moment, and we're looking to develop more. It's kind of frustrating. We're under a non-disclosure agreement with one of the people that we are getting the trading bots from, and we're using stock bots at the moment, but because we're developing more, that's where the NDA kicks in. You can look around the space a little bit, and you'll see some other protocols using trading bots, and if you ask them about it, then they say NDA. It's probably more than likely the same group. That's about as It's really frustrating, because obviously everything else is like on chain verifiable and everything, and then suddenly it's like, oh, there's an NDA, and now we're kind of doomed. But we're using them. They're kind of a micro deployment at the moment, because while they're back tested, we also just want to get a feel for them ourselves, so they don't have much room for error with us at the moment, so to speak. But that's unfortunately about all I can give you on that.
I would say that it would be good to have maybe a different option, in that sense that you can at least diversify some amount of money to, that you could talk about it, because it's not that I don't trust the project with what they're developing, but if you can't divulge any information, it's just hard to get a feel for it entirely, and then you're just basing that off of whatever returns you bring using those products.
No, I completely agree.
We can we talk about the stock ones? But I don't know.
I don't the NDA freaks me out a little bit. So what
You don't
we're
need
still
to go
talking to them a lot.
into it, but you in that sense, you
Yeah.
are also in stock investments for the treasury. Is that what you mean by
Yeah.
that? Okay.
So he means that basically the bots, there's also stock ones that anyone can use. And so those are we can probably talk about them, but I'm going to basically, once we speak, we have a call with the bot guys tomorrow. And I'm gonna just talk to them about exactly what we can say. And so that will more than likely open up more information that we can give. But no, I completely agree that it's suboptimal in that sense. And even for people trying to predict APRs and stuff, it has that effect. So and that's why at the moment we have a total of, it's only $10,000 in those bots. So it is a smaller scale while we test them out. So part of that question, yeah, I won't be able to answer in the future, but equally part of it,
Right.
I will be able to give more info as well. And I understand it's a bit frustrating to only get that much now.
And I won't get overly shilly on your time, but we can definitely help create some more networks of exposure in that sense. If you're looking to find more diversification for developers or people that on the more front end can be transparent about the coding, what they're doing, and frame of reference from that point.
Yeah, I mean, we're always open to conversations like that. So yeah, definitely we'll take you up on that.
And just wanted to do another question, asking a little bit more reinforcement about your results as personal traders and crypto investors, how you have functioned in like personal investments, what your results like, what investments and risk profile are you looking to take, and if you are going to be doing any risky investments, what percent of your total treasury capital do you expect to be doing the more degen plays, quote unquote, not necessarily in that general field though?
It'll obviously change with the market, but you can think in and around 70, 20, 10, 70 being your safer scale, with 20 being then more degen, and then 10 being like a seed round or a private round in investment. Personal wise investments in DeFi, for me personally, I've done relatively well. I caught Wonderland back in the early days on like Macquarie. I got significantly hit by UST. Not as significantly as a lot of people, in the sense I think I netted 12% loss, which is very good, but equally
Very
it was one
little
of
in
my kind of
comparison.
bigger losses. Yeah, for me it was like heartbreaking, and then I was seeing everyone else lost an absolute, all of
Yeah.
it basically. So and I was lucky I swapped to a short position on Luna as well once I had withdrawn my UST as well. So that was obviously very, very profitable.
And hey, that's good. It shows that you're aware of the market movements, like especially in a disaster of that scale, you were able to be pretty capital preservative in that sense. Preservation in any stage of the market is super essential, especially when we're getting into these more volatile stages where we can expect some rallies, but if you're not keeping a close eye on things, you can easily get wrecked by any even potential black swan event. So that's a good step up that you've had that experience prior. Do you have any partnerships planned into the future that you can speak of at this time?
Yes, I mean we've got a couple at the moment. We've got one with Overnight who create USD Plus, so we work very closely with them on the USD Plus deployment on Avalanche, but also we fund part of the LP, and that's basically due to a swap back section of our contract where we swap assets held in the Infinity Pool to maintain our ratio of USD Plus and USDC. So we deposit into the LP there so that we regain on the fees that we would spend to swap back. We then, I suppose, one that I can talk about that's been, everyone throws around Sphere's name a lot, and so I don't want to just do the same thing, but basically with Prion and with a lot of protocols that offer like Yeti Finance, if you guys are familiar with those, these are lending platforms that accept a lot of different collateral forms, and our token is a very, very good candidate for collateral because it is okay, there's a high level of confidence there in terms of its value. We talked about how there are potential risks, but there's actually riskier collateral being used out. There's a lot more risky collateral actually being used out there at the moment, and so we will aim to get our token accepted, and that would be through the form of a partnership, potentially with Prion. Although if there is no partnership there, we will have to just vote to get it done. But either way, we'll be looking to have it accepted as collateral, and that's something that will bring a lot of options, particularly if we can accept PUSD or YUSD into our Infinity pool. Then we can actually make looping very, very safe, and well, as safe as looping can get, and responsible, as well as we will be able to hold that PUSD or that YUSD in the stabilizer pool of that borrowing protocol. And if we can hold it in the stabilizer pool, then we're contributing to the stability of the very stable coin that we are accepting and that our users are receiving their loans in. So it's a nice circle of security. Kind of get it. The bigger the circle gets, the more secure things get, as long as you don't ramp the leverage to, like, 20x or something.
Oh yeah.
Do you know one of the major metrics lending platforms look at is liquidity, and you technically don't have a traditional liquidity pair. So like you're gonna have to get them to acknowledge your contract as a redeemable, like, you know what I mean, as a place where people can redeem value for their token.
Yep.
Right.
Yeah, so we've spoken multiple times to Yeti Finance, and their question always from the start was, "Is it liquidatable?" And the answer to that is yes, and they're happy with that. So while that's not finalized, they've never expressed any concerns regarding having an inability to liquidate our position, nor has Sim when I have spoken to him on that topic. So while those are not set in stone, I have never had anyone face any concerns, because they can verify at any point in time whether there is the correct value in that contract or not. So
I
they're
understand the
usually happy.
functionality, but it's not the traditional. There's no metric like DeFi Llama's not going to pick it up as a liquidity pool, track it as TVL, unless you can talk DeFi Llama into it, right? So it's like it becomes a step-by-step thing. You're going to have a challenge there. Could happen. Not saying it can't.
Yeah, I'm sure there's always challenges.
If the trading bot is bringing in 3% a month, why not use somebody like Ego, whose bot brings in 30% a month pretty consistently, and their model seems to be proven and working really well on Binance Chain?
So
This is a community question.
I think I just misphrased a little bit. So 3.3% is on the total treasury value, as our bot deployment is only $10,000. So the bots have made more than that. They made 8%, I think, in 2 weeks or so, if I remember correctly. So, but they have a micro deployment, so they have a reduced effect over the whole treasury. So the 3.3% is on the $100,000, that sort of way.
All right. Still, it comes down to what somebody's going to choose, right? Ego is an interesting model. I don't know exactly how it works, but their fucking token's going crazy. My God. Anyway, Milkman asks, say I invest $1,000 and I don't lock anything. Over a month, the treasury makes money and I get paid out like $10, for example. How does that $10 get to him? Is it dropped in his wallet? Oh, I think this was covered. It gets paid back in their token. You get back more of the token redeemable for more USD, right?
If you locked, you would get more. If you don't lock, the token price has increased.
When you redeem it, it just redeems for more value.
Yeah, exactly.
Got it. Okay. Timeline of pre-sale and launch. There is no pre-sale, as far as I understand. The launch is planned for when?
4 to 6 days, depending on how quickly we can just tie in our DApp, basically. But we're just waiting on that to be done.
Do we get to preview the DApp before launch? Before launch day?
No. Well, potentially, depending if it's delayed again, we'll start releasing sneak peeks and stuff.
Did you
But
say
we'll obviously heavily test it out.
Multifarm was building that?
They do our data extraction, yeah.
Gotcha.
We then build a visual layer on top, but they've done our data extraction, yeah.
The contracts.
So it won't look like, multi-farms dApps always look the same, like
Yeah.
Ohm and Sphere is they look the same. So it won't look like that, but yeah, that's their data extraction.
One of our DeFi protocol partners also works with Multifarm as well on that sense. So
Okay. Yeah, they're awesome. Their data extraction is brilliant. Pricey, but they always are. And yeah, their work is solid.
So something we haven't touched on. Can you explain the NFT? Is it called Destinations?
Okay. Yeah, so this is something that is slightly postponed at the moment, just while we handle all the workload that we have now with what's, with migrating and all of that. But Destinations is an NFT which will basically hold travel lotteries to different locations around the world. And it's got kind of staking metrics in there, but there'll be lotteries that, depending on the location depicted on your NFT, will win you travels to those countries. But somewhat delayed at the moment. Well, pushed back at the moment.
Okay, interesting. I'm not too excited about the NFT thing, if I'll just keep it real. Do you really think it's necessary?
It's not necessary, no, but it's there's more to it than what I've said, but it's not a necessary thing to like a hybrid holder or an investor in our protocol, but it's almost standalone as something that we want to build out as a team. And so one of our commitments to our community is just that everything that we as a team or individuals want to build out in DeFi, we will provide them with advantages if they are holding our token and if they are involved in our previous projects.
it
We're not
does
going to
kind of
just
sound like
head
a
off and just
secondary
set up something
product.
separate.
Do you,
Yeah, so that's kind of why we haven't talked about it too much.
But I mean, just to break down a little bit, saying you're going to launch an
Of course.
NFT, did you have a chain where you're going to go with an omni-chain focus? Is this going to be AVAX in nature as well?
It would, yeah. So we initially were looking at Avalanche, but then it's between Avalanche and just going with ETH. Realistically, the selling point obviously is ETH is just it's way more popular with NFTs, right, than Avalanche, and that's that we would rather stay where we currently are. It would make any tie-ins much easier if we stay on the Avalanche chain, but ETH does seem slightly more practical.
All right, I think that's good on the community questions. I got a random question as we kind of wind things down. What do you think is the biggest problem with DeFi?
So I think it is. I'm gonna follow. Gonna take a leaf out of your book here and just say things a little bit more as they are. But the Liquid Capital project that launched recently, that really annoys me because they use partnership, and it basically it's manipulation of phrases and words that retail investors associate with legitimate things and just bending them when actually all that's behind them is crap. So they had like 20 partnerships, and actually what it was more like is just a referral link system where those partnerships, they were getting their community to contribute to the pre-sale, and then the project was getting back 20% of what everyone contributed. So it's just like a cash grab basically. And now that the price is tanking because everyone is realizing that these are not partnerships, these are just referral links. And it's taking the partnership word, which people think means that you're working together to build something together that has got tangible lines of collaboration, when actually you're just making a deal behind the scenes to give each other money. And I think this is what just kills investor trust, and it kills investor enthusiasm for projects. Because now we get to the stage where everyone is super cynical of everything, and rightly so. And it's frustrating that the cynical people for once are now right, you know?
Just so you know, there's no right answer. There's a lot of different things that could be said about DeFi. I think bad actors and um, malicious whales are a lot of the biggest problems that we see in low level DeFi that a lot of people are totally unaware of. you know, there's people who literally have enough sway to control how many, or like what project is going to succeed, for example, you know.
Yeah.
So it's crazy, but there's a lot of problems with DeFi. I think another big issue is empty promises and lack of experience. And that's what we see from a lot of people. I think that we saw with Liquid Capital, the price bot failed. You know, they were supposed to have a stable
Well,
price bot.
they shut
They
it
didn't
off,
fail.
actually.
They
They
took
shut it
Yeah.
off because they didn't have
So-
liquidity.
They're not even. They manipulated the branding through Horde, and that's one of the reasons why just people don't understand that using a service isn't exactly a specific endorsement. They were using Horde's brand and the model of the liquidity system paired with the referral system to onboard new investors that didn't understand like what they were trying to explain, but they were malicious in action anyway. I'm fairly certain to my knowledge, they also sold a decent amount of their own token on release of the management system.
Yeah.
Be a warning to all project leads, founders, developers. Be very careful who you fuck with, because so many people are willing to utilize your name and extract value from what you've built to, you know, rug somebody or to extract value from your community or whatever it might be. It's one of the reasons why I'm so defensive up here, and I want everybody to just know that, you know, I got a lot of love for the people in TulipDAO who have been here all this time and been grinding with us and making money and losing money and fucking everything in between. So, you know, I want everybody to succeed as much as possible. So that's part of the reason for it. You guys seem cool. Seems like you guys are you know, you have integrity. You have built something that is actually innovative. I think that you're going to eventually have to redevelop the product, like execution, the way it's presented to the customer. I think you have to work on that. I don't know if the infinity pool thing will work. It might be fucking genius. Maybe we're all stupid, but you will have that chance to prove to us, you know, what the protocol can do. Need that treasury to make money though, boy. That's your biggest challenge. I will say that right now.
Oh yeah.
No, but I do have to say, in contrast of you guys finding us through the last AMA, I'm delightfully surprised to have this conversation and the amount of thought and care that's been put into what you're attempting and the amount of promise that if you do succeed that you have into the future. But like Tulip said, building that treasury and being effective during these types of markets, especially if we're talking about, even if we want to be like, I don't know, just a little expecting that this isn't the bottom of the market and how we're moving into the future to be safe. But if you do succeed, especially in the next months ahead, a lot to prove from the team. I like it.
I appreciate that. Thank you.
Thank
Yeah,
you.
no, I mean, yeah, we're super excited, and we appreciated the questions, and yeah, it was a lot of fun, and equally, these things are good because they give us things to think about. You know, it's not just about us shouting about our project; it's also about listening to what you guys say. Like even just another set of eyes is never a bad thing. Particularly, you guys have plenty of experience in this space, so there's plenty to be learned from all of that, and even from the community here as well. There's never a point that it's just worthless to talk about what we're doing and to see what other people have to say. Even if it's people are always asking the same question, well then maybe we need to explain things a little bit more clearly. So we appreciate that.
This has been our 30th Investors AMA here at the TulipDAO, now offering KYCs for your broke ass projects, because there's no credibility unless it's done by verifying your founders and the wallet holders and the devs. Be smart. Have a great day.
Let's go.